Hey everybody, and welcome to Mortgage Today for Tuesday, October 10th, 2023, and oh, what a day it was. Markets were closed yesterday for Columbus and Indigenous Peoples Day, so we opened back up today to a hot start. MBS were up 45 basis points bright and early this morning. S&P futures were pretty much flat. Cash bond trading was closed until 8 p.m. Eastern time last night, but global financial markets had already responded to news in the Middle East. Investors moved into bonds as a safe haven as the news of war was announced. Surging treasury yields and recent market openings have some Fed officials suggesting less need for future hikes. So far, it seems that we have had a muted impact on oil prices, which is going to be super important for inflation. While international instability usually causes interest rates to fall, the strong labor market is the biggest factor and will probably remain so, especially after Friday's big number. We did get small business optimism, which slipped in September. Consumption remains strong as consumers spend on credit, while small businesses are dealing with a tight labor market. To manage rising labor, energy, and other costs, they raised prices at record high rates and continue to do so, adding to inflation pressures. At the end of the day, bonds rallied fairly sharply to start the holiday-shortened week. The most obvious source of motivation was a flight to safety driven by the Israel-Gaza conflict, but the explanation raises questions due to the stock market also improving. A true flight to safety would see stocks move lower. A slew of friendly Fed comments helped everything make sense. The Fed increasingly sees the bond market doing more of the heavy lifting on creating tighter financial conditions, thus obviating additional Fed rate hikes. One could even say that the attacks over the weekend suggested that the Fed err on the side of steady rates versus rising rates at the next meeting, thus providing a way to reconcile both in the competing market motivations. MBS closed the day up 58 basis points at 98.25, which puts us right in the middle of these two Fibonacci R1 and R2 retracement lines. Have a whole bunch of Fibonacci lines around there, but not a lot of heavy statistics like moving averages, which is well above our current rates. We also got news that the Chinese real estate developer Country Garden has defaulted on a HK-denominated loan. Sales have collapsed in the first 3 quarters of 2023, down 44% from the previous period, and September sales down a whopping 81%. The developer has $187 billion in liabilities. Some think that this is the biggest black swan event in the financial market. I find it highly unlikely that the world's second biggest economy could have a Great Depression-esque real estate implosion without having negative impacts on the rest of the world. Western investors and banks will lose money, and that might be a catalyst for the Fed to cry uncle.